Okay, so let's have a look at March for Delaney 2017. So management decided that the provision for bad debts should be increased to 6% of debtors at the end of March. So we'll go and have a look at our tabular statements. So our debtors are 90,000. We also have an extra 12,000 in February. So our debtors have increased. So we have to add 90,000 and 12,000 together to get our new debtors figure. Now remember, we have a provision for bad debts already of 3,600. So we're going to see if this provision for bad debts is going to go up or if it's going to go down. So it's going to be 6%. So 90,000 plus 12,000 gives you 102,000. So our 102,000 multiplied by 6% gives you 6,100. So our provision for bad debts is going to increase to 6,120. So how much is it going to increase by? So we have a provision for bad debts already of 3,600. That's our old provision. Our new provision is 6,120. So the difference then is going to be 2,520. So the double entry then, your profit and loss then, is going to be debit 2,520. Now remember, our profit and loss is down in the liability section. So your provision for bad debts is going to increase by 2,250, so that's up in your assets. And then your profit and loss is going to increase by 2,520 because the profit and loss itself, remember, is in the liability section. So we're going to have to pay more for that. So on our tabular statements then, you're going to have the following. So provision for bad debts, 2,520. So 2,520 then is our total. Just to make sure it's correct. 2,520 it is, yeah. And then our profit and loss then is going to go down by 2,520 because the company is going to have to pay that out. So remember, that expense has now increased in our profit and loss account in our expense section. So our profit is now decreased by 2,520. So that's your February. So our provision for bad debts, okay, so it's going to be minus against our debtors. So our provision for bad debts has now increased. So if it kind of helps you with your total figure. So if we add these up in our total, when we add the 3,600 and the 2,520, we've now got our new provision, which we just calculated to be 6,120. So remember, new provision was 6,120. So that's how you answer March. So remember your provision, 2,520. We just put in the difference because we want it to be total to be 6,120. And that's kind of where the T account will help you with that. So this 3,600 is what we had at the start. Our new provision, 6,120, that will be brought down here to the next period. So the increase is 2,250. So you're going to credit your provision for bad debts account, and you're going to debit your profit and loss account. So that's going to be an expense in the profit and loss account. So our profit and loss is now going to decrease. And that's what we have down here. Profit and loss account's going down by 2,520. And our provision for bad debts is a minus anyway, 2,520. And in your total column then, you'll have 6,120. And that's your March adjustment done for Delaney.